What about the global economy right now? Are you having any concerns there?
Well, as you reported, I would say yes. I've actually just come back from Europe. I don't see how Europe avoids the periphery dragging the core into recession. Most of the strength in Europe came because of the export boom from Germany, feeding the demand mainly from Asia. And you know, you've got the U.S. slowing, Asia slowing, and I think Europe pursuing essentially Herbert Hoover 1930s depression policies.
Well, you know, we have credit default swap. CDS is right now pricing in 100% probability that Greece will default, but you're predicting a recession sometime in the next 12 months. Why not immediately? We won't see it in the next few quarters, you think?
Sure. I mean, I think any economist who puts a fine decimal point on any forecast has to have a good sense of humor. No, I think Europe may well even be in recession as we speak. As an investor, what interests me is the rate of change, and global growth has clearly slowed, and equally importantly, global markets are now in a cyclical bear phase, and I think long-term values of many of these global businesses are incredibly compelling, but in the short term, I think prices are probably going lower.
Okay, well, let's talk about the U.S. then. 50-50 on recession, basically double dip, which seems a bit more bearish than other, shall we say, fundies and investors that we've talked to on the program. What are you seeing in the U.S. right now? Is there anything the Fed will come up with this week to try to stave off recession once again?
Well, recession is going to be a word that I think meant more when growth used to be 4 or 5% when it was robust, and then you went into recessions. We're in a slow growth, deleveraging environment, and so we will have, I think, quarters of negative growth, quarters of positive growth. I don't think the U.S. goes into a full-blown recession unless something really tips confidence downwards. In other words, we've really had the corporate sector has resolved its balance sheet issues. The problem in the U.S. is simply one of demand. We're not creating jobs, we're not creating demand, and I think business people, although they've got lots of cash, are very cautious, and so they're not inclined to borrow or spend. And that means, in my judgment, that earnings are going to come under pressure.
Well, you know, when you say global stocks are in a cyclical bear market, how much more downside do we have?
It's hard to put a point on it, but it wouldn't surprise me if there's another 10% downside. I think valuations are supportive. Valuations of stocks relative to bonds are off the charts. They're so attractive from a long-term point of view, but I think we could easily have another 10% downside.